Everybody, what's up? Michael Edward here, head trader at True Trading Group. March 25th. Um, a good day, but a lot of different lessons that we're going to talk about in this video. This is going to be kind of a trader education video, both mental lesson and technical lessons. And I've got a new swing trade on in the overall markets that I'm going to share with you. I just entered a put option swing trade on the SPY today. I already took some profit off for a 46% gain on 25% of the position. I'm still holding the bulk, looking for more. Um, Sorry, guys, I didn't post a video yesterday. I tried. YouTube had some kind of issue yesterday. The volume on the video that I uploaded was so insanely low, but the raw audio file was perfectly fine. It was an issue on YouTube's end. Um, so I do apologize for not having the video. I made the video, just didn't post it because you couldn't hear it. You literally couldn't hear it. So yesterday we were in chat, at least, and in my video we were talking about a bear market rally. And yesterday we had the biggest day in stock market history, um, as we have the hopes of this economic stimulus bill passing through Congress. And it looks like that bill is going to pass. But the thing that you guys have to realize is that the biggest days in stock market history have all occurred during bear markets. Okay, the biggest days in stock market history were in the early 1930s, which was the Great Depression, 1987, 2008, and 2009, and then obviously 2020, which over the last month or so we have the biggest days mixed in there as well. So like your top five, top seven, top eight biggest up moves in market history have all occurred during bear markets. And I thought that this rally that we've seen over the last 2 days is just a typical bear market rally. And in bear markets, rallies get sold. My thought process on this swing trade is as follows. I'll cover the swing trade with you guys first, and then we're going to get into the mental lesson that I want you to take away from the trading day, because it's a really good one. And it's something that all of you relate to. A lot of people are, the kids are home from school, you're working from home. And this is something that every single one of you can relate to as far as the mental lesson goes, because I was extremely frustrated this morning and I almost lost my cool, but was able to kind of keep my composure and then execute a phenomenal trade on the SPY put option. So let's talk about the trade first, and then I'll go over the mental lesson. It's going to be a good one. So as far as the swing trade is concerned, what I was looking for today was the markets to extend higher as we get we got the announcement late last night or early this morning about they came to an agreement on the White House and the Senate on that excuse me, on the stimulus bill, and the markets gapped up today. And I thought we were going to get some extension off that move. And I was looking at a very specific resistance area around 257. Okay. Why 257? This resistance right back here. Okay. Like 256 to 257. There it is. There's your resistance right there. Last Monday and Tuesday, the 16th and 17th. There's your resistance. We were rallying up into that area today. I'm thinking to myself, this is a typical bear market rally because the market getting excited and essentially blinded by the stimulus package that's coming out of Congress. Now my thoughts are, we're coming up to a key area of resistance, and where's our next positive news flow going to come from? I don't see any. I think the positive news is now behind us for quite some time. Over the last 2 weeks, we've gotten negative headlines mixed with positive headlines. Negative headlines about the virus, the spread, deaths, Italy, lockdowns in the United States, economies kind of shutting down. But the good news that we had mixed into that was stimulus from the Fed. The Federal Reserve was doing endless amounts of, huge stimulus packages and programs, buying corporate bonds. They're buying mortgage-backed securities. They're buying treasuries. They're buying, it's basically QE infinity is what the Federal Reserve is doing. And we've gotten all of those positive headlines over the last 2 weeks, but the market has still come down, which means that the virus headlines were more destructive than the Federal Reserve stimulus headlines were productive. Um, and now that the Congress stimulus bill, now that that news headline is kind of getting behind us, what's next? What is the next positive headline going to be that the market's going to get? I don't I don't have any. We're going to get the news headlines that we're going to get for the next couple of weeks are more cases, more deaths, more lockdowns, and more strict kind of requirements and guidelines and measures that individual municipalities and states are going to be taking to enforce those lockdowns. You're going to get, you know, shortages of equipment in hospitals. You're going to get all of that news flow is going to be negative. The only positive news that I see coming in the future is a slowdown in cases, which we know we're not going to get that for a few more weeks, at least two to 3 weeks, probably. Okay, some people say more, but whatever. Either way, it's a couple weeks out before we get a slowdown or a peak in cases. Maybe progress with a drug combination that could treat people that are critical and that can lower that mortality rate and that death rate. um, those type of headlines will be seen as positive, but those are headlines are all going to take time. So in the meantime, the only headlines we're going to have is increased cases, increased deaths, increased lockdowns, stricter rules and regulations. That's all negative headlines. This is why I thought that getting short the market on what I think is a bear market rally, and the difference between bear markets and bull markets, guys. In a bull market, dips get bought. In a bear market, rallies get sold. So on this rally between today and yesterday, I'm looking to get short in front of resistance levels for a typical bear market rally fail and pullback. Not to mention, we have the jobless claims report coming out tomorrow at 8:30 a.m. That number is going to be astronomically high. Okay, we're hearing that just 1 million people filed for unemployment just in the state of California. We have never had a number like we're going to get on the jobless claims report. Now, everybody expects that number to be terrible, but when that number actually hits tomorrow, I think reality is going to start to set in on where we actually are, and people are going to stop being overly excited about the stimulus package coming out of Congress because we still don't know when this is going to kind of end. And I think you get a pullback over the next couple of days. So I went ahead today and I bought, I'll take you guys to the chart, the intraday chart, and right there, okay, I went ahead and I entered a swing trade on SPY put options. I bought the 250 strike Friday expiration puts at $6.01. I'll take you guys to my trade announcements on the day. I had to break up my trade announcements into um, two sections. We had a lot of action in chat today. And then we have all obviously a new professional trader, a new moderator that's in chat now with me, also calling out trades. That's Jason the Wolf. If you guys caught the live stream, what I announced it the other day, so he's calling out trades now as well. So we're a little bit more active now. But here we are at 2:30 in the afternoon. You guys see here, swing trade. I bought the 250 strike Friday expiration puts at $6.01. Then, not too long before the close, big pullback in the SPY as there's a little bit of a rift going on between Bernie Sanders and a couple of Republican senators over some verbiage and language that's in the bill. Bernie Sanders threatened to block the bill if they didn't accept certain language. Um, I don't know too much about the actual language that it was. It came out right before the close. I have to look into it still on what the holdup is, but I don't think this is going to hold up the bill. I still think the bill will pass. I think it's just typical politics. But you see, you got the quick pullback right before the close, and those options just jumped. So I said, wow, all right before the close, I'm going to take a piece of profit off the table, and I sold 25% of my position. Back to my announcements, you can see here I took some off at $8.75. That's like a 46, 45, 46% gain, and I'm still holding the bulk of my position, thinking that tomorrow morning we get the jobless claims number that pushes the market lower, and we continue to put in the kind of to really secure a bear market rally, which gets sold into. And I think maybe we start to do something like this and we get back down into the low 240s, high 230s. I think is a very realistic expectation for trading action to get back into the 230s. And that's what I'm positioning myself for. I do plan on holding these puts till Friday because I do think we're going to pull back over the next 2 days. If we get a big pullback tomorrow, or maybe we get a big gap down or something like that off the jobless claims, I'll probably take the bulk of my position off the table and hold that last piece into Friday. All depends on what happens in the morning, and see what happens with the jobless number, and see what the market does tomorrow. Okay, my stop loss will be if we get back above this 257 area. So if the SPY gets above this area, then I will exit those put options. But for now, I'm sitting real nice and pretty up 46% and still have the bulk of my position looking for more. Okay, and we will see what that entails. All right, guys. So that is the swing trade that I wanted to talk to you guys about on the SPY. Now let's talk about the mental lesson. The mental lesson today. Um, oh, I also got hit. I got beat up a little bit today, guys. I was in ASTC when they came out with an offering. ASTC, I was long ASTC in here looking for us to break through highs, and they announced an offering in the middle of the day, and the stock just rolled over. So that's just risk that you can't really. That's just inherent risk of trading the markets. There's no way that I could have foreseen the company announcing an offering in the middle of the day like that. This was their offering announcement right there. They announced that offering, and I was long in that, so I exited as soon as the offering news came out, and that one hurt me a little bit. So I had to kind of work my way back today. I was red in the morning, but the my trades in the option, my option trades in the SPY kind of brought me back. Not only with the swing trade, but I also pulled off a day trade right in here off of that level. I'll take you guys to my announcements. You can see here at 148, when we first got to this level, I grabbed a same day expiration put option in the SPY right there in front of this resistance level. Okay, I take you guys back to my announcements. Here you can see I bought the 250 strike today expiration at $1.06, took 25% off at 150, took half the position off at 179, and then I got flat the last piece before the close because I was just running out of time. Um, but that was a decent little trade there on that pullback off of that resistance level. And then you guys see, obviously, then I entered the swing trade position right there. So there was the entry on the day trade. There's the entry on the swing trade. And I was just kind of taking profits there as we pulled in before the bell. All right. So that's what I'm set up for going forward with some SPY put options. We'll see if we get some further downside. I think we do. I think these last 2 days were a typical bear market rally with stimulus, you know, um, not stimulus hopes, but people are excited about the stimulus plan. It's a catalyst to push the market higher. But I think once that news passes, I think we get another pullback. Now let's talk about the mental lesson, guys. This morning, I was super frustrated. I usually, everybody is dealing with their own stuff, right? With this coronavirus, and people are on quarantine, the kids are home from school, you're working from home, you have distractions that you maybe normally don't have. And I had something come up this morning in my personal life that distracted me this morning, and I was very, very frustrated. I was very, very frustrated because I was looking at ASTC. Okay. I was looking at ASTC and I was looking to get long ASTC right at this trade line view up crossover pattern. You can see there's your trade line view up cross, and that ignited this monster move. Okay. From $4 all the way up almost to 8 to like 775. That's a huge move. And I missed my entry on this because I was distracted with something else going on in my personal life this morning. And the point of me sharing this with you is because I was very, very frustrated. I know a lot of you are probably dealing with, certain distractions. Like maybe you're trying to trade, and meanwhile all you hear is do 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 do. Your kid falls down the stairs. You got to go make sure they're okay. You come back to your desk and you miss your entry, and the stock takes off without you. So I know a lot of people are dealing with, your phone's ringing, you're answering emails, you're working from home. A lot of people have other distractions that they don't normally have. And what I will say to you is this: when you are distracted like that and you have other things going on, you've got to take the time necessary to handle whatever the outside distraction is, because you cannot trade and take care of that other distraction or other responsibility at the same time. You need to be laser focused when you are trading throughout the day. You are putting your hard earned money at work. Do not do yourself a massive injustice by half-assing your trading if you can't focus all of your attention time on it. All right. So when something like that happens, take the time that you need. The market's not going anywhere. If you miss one trade, so be it. You miss one trade. You've got to be able to keep a level head, because I was pissed that I missed ASTC. I actually had to get up from my desk, walk away. I got another cup of coffee. I played with my dog a little bit. I came back, I sat down. I was like, okay, fine. Because I was pissed off watching this thing run to $7, and I was trying to get long at like 410, 415. I'm like, this was a huge move that I just missed, and I was really frustrated with it. But point is, guys, you can't try to do both. And if you find yourself getting frustrated because you miss a trade because you're distracted, take a breather, take a minute. There will be more opportunity. There will be more trades. Don't feel like you've got to go after every single stock. It's more important that you are laser focused when you are trading. So that's the mental lesson I think is very important, especially during this time specifically, that a lot of you can relate to. All right, and I wanted to share that with you on this video. So I'll keep you guys updated with this SPY put option trade. Again, I have the 250 strike Friday. That's a March 27th expiration puts. I own them at $6.01 a contract. I took 25% off at 875 for a 46% gain. Still holding the bulk of the position. We'll see what happens tomorrow. All right. Take care, guys. I'll see you all in chat later.